Welcome back to the channel. Today is April 25th, and today we're talking about AMD Advanced Micro Devices, one of the most important semiconductor companies in the world and a major player in CPUs, GPUs, data centers, and artificial intelligence. AMD is a stock that has had an incredible run over the years, and at roughly $351 per share, expectations are clearly high. The big question now is whether AMD can continue growing into this valuation or whether the stock has gotten ahead of itself. Before we break down the business, competition, and long-term outlook, let's start with price targets so we have a clear framework early on. At today's price around $351 per share, AMD is pricing in significant AI and data center success. In a bear case where AI spending slows more quickly than expected, competition intensifies, and multiples compress across semiconductors, AMD could pull back into the $260 to $280 range. That would still reflect a strong company, but with lower growth assumptions and reduced enthusiasm. In a base case, where AMD continues to gain data center CPU share and becomes a credible second player in AI accelerators without fully matching Nvidia's dominance, a fair valuation puts AMD in the $360 to $400 range over the next 12 to 18 months. In a bull case, where AI demand remains strong for years, AMD captures meaningful AI accelerator market share and margins expand alongside revenue growth, the stock could justify a move toward $450 or higher as earnings scale and the market rewards long-term leadership. Those are the guardrails. Now let's talk about how AMD actually earns its place in those outcomes. AMD is a semiconductor designer, not a manufacturer. Unlike Intel, AMD does not own fabrication plants. Instead, it relies primarily on TSMC for manufacturing. This model allows AMD to stay flexible, avoid massive capital expenditures, and consistently use the most advanced chip processes available. This decision is a huge reason AMD was able to transform itself from an underdog into one of the most competitive chip companies in the world. AMD's business breaks down into several key segments. First is client computing, which includes CPUs for desktops and laptops. This segment is cyclical and closely tied to consumer demand. While PC demand has been uneven, AMD has continued to take market share from Intel thanks to strong performance, efficiency, and competitive pricing. Second is gaming. AMD provides custom chips for both PlayStation and Xbox consoles. These contracts create long, predictable revenue cycles and provide stability even when other segments slow down. Gaming isn't the primary growth driver, but it provides consistent cash flow. The most important segment by far is data centers. This is where AMD fundamentally changed the narrative. AMD's EPYC server, CPUs, directly compete with Intel's Xeon processors, and over the last several years, AMD has steadily gained share across cloud and enterprise customers. Major hyperscalers like Amazon, Microsoft, and Google deploy AMD chips for their performance, efficiency, and total cost advantages. Data center customers are extremely valuable because switching costs are high. Once infrastructure is built around a specific architecture, those relationships tend to last many years. But CPUs alone are no longer enough. AI has completely reshaped the semiconductor industry. For a long time, Nvidia dominated AI computing almost entirely. Its GPUs and CUDA software made it the default choice for training and inference. AMD was not considered a serious AI competitor. That is changing. AMD's Instinct MI300 accelerators are built specifically for AI and high-performance computing workloads. These chips integrate CPU and GPU capabilities with enormous memory bandwidth, targeting the exact needs of modern AI models. The key point here is that hyperscalers do not want a single supplier. As AI infrastructure spending explodes, cloud providers want alternatives to reduce risk, control costs, and maintain flexibility. AMD doesn't need to replace Nvidia. It simply needs to be the clear second option. Even capturing a modest share of AI accelerator demand could translate into billions in additional revenue. Now let's talk about competition. Nvidia remains the clear leader in AI hardware and software, and its ecosystem is a massive advantage. Intel is also fighting back aggressively with new architectures and large investments. AMD sits in a strategic middle position. Its strengths are efficiency, price competitiveness, flexibility, and strong relationships with major customers. Its biggest challenge is software maturity compared to Nvidia, though AMD is investing heavily to close that gap. From a financial standpoint, AMD is a premium stock. The market expects growth. Revenue has been volatile due to PC cycles, but margins should improve as data center and AI products make up a larger share of the business. Semiconductor operating leverage means incremental sales can significantly boost profitability. The balance sheet remains healthy. AMD has manageable debt and enough flexibility to continue investing aggressively without excessive dilution. That said, risks matter. AI spending could cool. Competition could intensify. Expectations are high, and any execution misstep would likely be punished by the market. Geopolitical risk is also a factor due to AMD's reliance on TSMC. So, how should investors think about AMD at $351 per share? This really comes down to whether you believe AI is a short-term hype cycle or a decade-long infrastructure transformation. If AI demand continues growing across cloud, enterprise, and edge computing, AMD is one of the strongest diversified ways to gain exposure without betting entirely on one dominant player. It won't be a straight line. Volatility is guaranteed. But AMD is positioned at the intersection of CPUs, data centers, and AI acceleration. That's a powerful place to be. Thanks for watching. If you enjoyed this breakdown, consider liking the video and subscribing to the channel. It helps more than you think, and I'll see you in the next one.